GBP negative fundamentals continue to stack up against the Great British Pound, or not so great. Guys, as I've said on a number of occasions, we've had this, any rallies should be sold, that sort of theme, in which I believe, given the underlying fundamentals. Now, obviously, we've got the Brexit stalemate, okay, where it doesn't look like they're going to be asking for an extension next month. They've literally got one chance only, and if they don't, then come the end of the year, then they leave potentially with no deal. And time is very tight, and bear in mind all that time that he lost due to the COVID-19 situation that massively disrupted, planned negotiations, as I say, that started late and virtually, and nothing has happened with that. On Friday, as in today, as I'm recording this, retail sales were bad from the UK. A big contraction of some 18%, which is not good. Consumers, obviously, understandably, were not spending at the end of the day. Of course, a lot of high street retailers were closed, shutting up shop. All the non-essentials were not open and available to the consumer. And even if so, consumers were tightening up pockets, understandably, given this potential, this economic crisis caused by COVID-19. Now, another thing just to add on top of all of this, right, is markets are beginning to price in potential negative interest rates. Well, not aggressively, it's on their radar, okay? It's on market players' radar that negative rates could be introduced in the UK, because a number of Bank of England, or several Bank of England members, have spoken about their openness to the idea of negative rates. Now, interest rates cuts themselves are not good for respective currency, because why? See it from an investor perspective. If you are a foreign investor, you want to invest your money somewhere in a country, okay, and you understand now, the UK are looking to cut rates. That is not good for you, because you want greater return on your money. That yield is reducing, so you are going to be less inclined to want to put your money there. If you've got money there, you're going to look again your money out, right? Because there'll be an outflows of GBP, less demand for the pound, hence why value comes down. I hope that makes sense. So there's a few fundamentals there that are really starting to weigh on GBP, and as I say, and as I've said for a while, it's like, look, these rallies are likely to be short-lived, very much limited or capped, because in my view, Brexit is not priced in. It's not, okay? It would be an absolute catastrophe for the UK economy. It is not priced in. As I've said before, there's no reason as to why GU couldn't drop down to 110. And the markets will likely start getting very nervous come June, and the UK government has not asked for an extension. Okay, guys, look, fundamentals, technicals, we live and breathe that every single day at freaknetwork.io. Do check out freaknetwork.io. Go to become a member, see what we've got on offer. It might tickle your fancy. You might want to gain some more knowledge. Stay lit, let's get it.